My name is Max Gagliardi, and I'm here live with David Heikkinen on this Friday, the 13th of May, 2022. Hike, what's going on, man?
It's been a scary week in the markets, so it's appropriate that it's 13th. Good to see you. Good to see
Yeah,
everybody.
yeah, good to see you too. Yeah, the markets have been nuts. I thought we could start there. We got a couple things here. We're going to go for a little while today, kind of loose script, but just what have you been paying attention to these last couple weeks in the markets, or what's caught your attention?
And really, shape of the yield curve is one of the things that I've been thinking a lot about. And then I just read a lot
Mm.
about where inflation is and where your hedges against it, and got curious about historical facts around hyperinflation. Actually, tweeted something about that today just to
Yeah,
get an order of magnitude of, you know, from 1919 to 1923, you went from, I think it was like 4.9 Deutschmarks per dollar to 4.2 trillion Deutschmarks per dollar. So all of a sudden, you know, I was describing this last night to someone as I was thinking about it today. Um, what would Jeff Bezos be worth? 50 cents of purchasing power,
yeah,
essentially, at or less. It's just a really interesting perspective of when people throw around inflation, they really don't understand what can happen in a true inflationary environment, and do wonder where things go. So then it's the hedging. Like, I keep thinking commodity markets, and I'm a big commodity bull guy, and have talked about, and we've talked about it over the last year. It's almost probably about a 1 year anniversary of our first recording. I think we've got this opportunity where, free cash and cash flow matters a lot. You've got a return of cash to investors, and the energy crisis has been exacerbated by the Russian invasion of Ukraine. That's made the whole world pay attention to it. And energy is 10% of the S&P has been a theme in my head for about the last 6 months. Wrote about it a little bit at my previous firm, but have talked a lot more about it now, on a combination of energy up and rest of market down. And man, oh man, we are getting the rest of market down, but everything seems really correlated. So it's
yeah.
that's the other thing that I'm trying to think through a little bit. But
Let me ask you this: in your career, these periods, I'll look back and people have been throwing up a lot of charts lately of kind of like, I think I saw one. I mean, the obvious one is like the 70s where the stock market was basically flat, and that essentially had to be like an active investor to be able to beat the market, or to get a good return. And then you had, especially a return higher than inflation, and then you had like I think it was like the 90s through maybe like mid 90s through like the 2000s, and the market was depending on the time series, but like someone cherry picked a time series from like, I can't remember what it was. It was about a decade, maybe a little more, where it was effectively flat. Probably kind of after the .com bust.
mm,
But just, you've been through these periods. Do you envision like a period where we're moving into kind of like just sort of this broadly, like the market's kind of stagnating, the stagflation period, or just are you, basically what I'm asking is, you think you're going to have to be active and look at these things like commodities and have more of a strategy to make returns in this kind of environment?
owning real things, I think, is something that matters. And so the like, and that's probably the harder assets actually make sense. And having some gold, having some commodities, having some real estate. But the issue is leverage. And the other factor in the markets that's changed a lot is when you get over half the ownership in an ETF that just moves with the market. Everything lacks depth is the factor that I think is most common as I look. And what I mean by that is, there just isn't much trading liquidity in stocks, in bonds actually. And I think you're seeing the same thing of lack of depth in crypto, and like there's just no positive flow, and so it's a negative downdraft. And now we're pulling dollars out of the system as opposed to putting them in, and it's a very, very shallow market without a whole lot of support. And so that's the thing that I wonder what to do with that. And then I think, well, where's a market that people haven't been? Well, that's energy. And so if
Right.
anything, you will see some flows out, but they'll hopefully be less. And there's a possibility that if performance continues, you see flows in. And that's how I've thought about just the macro. But then I get very micro into individual stocks. Has been the way
Yep.
I've thought for a long time. And so quality, like I've thought about quality banks, I've thought about quality tech companies, like the companies that are actually generating a lot of cash flow. And I've thought about energy, and that's it's probably about the limit of my my current investing thoughts.
Yeah, it's interesting. Like had that conversation with Doomberg about Bitcoin, and he was saying that the reason why he calls it like a a Ponzi like investment is because you have to have more dollars coming in than dollars going out. And I made the argument, well, isn't that like all investments? And he was like, well, I wouldn't call all investments a Ponzi, which neither would I. But I was just kind of making the argument that you got to track the inflows. And what's interesting about some of these tech companies, or even about Bitcoin, like to me, Bitcoin, I do think provides a good and a service. It's a good and service that I think is hard for people in the Western world to wrap their head around, but certainly there's a lot of users around the world that actually use the network. But for a lot of people, it's just a store of value or an investment. And so, yeah, they're putting dollars in, and if there's less people putting dollars in to store value there, then the price goes down if there's more coming out. But like if you look at energy, what's interesting is that there's a bunch of dollars flowing in, and it may not be flowing in the form of investors buying the stocks, as we've seen in a few of these odd days where like energy is up and the stocks are down. But there's a ton of dollars coming in via the cash flows off these companies. And so it's like, even if you think about, oh, I'm trying to time the market and I want to buy more energy equities, or I want to get invested in energy, when's a good time? And I know a lot of people in our space, tweet about this and talk about it. But the reality is it's a good time because there's just a ton of cash flow coming in. So in theory, if these management teams, to your point on the micro, are managing that prudently, there should be value getting created there. I mean, there's a ton of cash flow coming in. So I don't know, maybe talk about some of that cash accretion and why people maybe should be focused on that.
Yeah, I still, I mean, even some of the comments on conference calls of, like companies that are generating, 100% of their market cap in the next 5 years, like those types of 75% of their enterprise value. Companies that between share repurchases and variable and fixed dividends are targeting 11+% returns this year. That's just not something that I think most energy investors or any investors have actually lived through. And then it gets better next year as hedges roll off if commodities stay strong. And I actually am a proponent for natural gas staying relatively strong for a longer dated time frame. This isn't, I know that I think we've had conversations with Ross Hendricks and some of the Twitter folks of like, well, back half of the year could be weak. Like that's not how I'm thinking about this. I'm thinking about a 10-year view, and that's really about it. So that's been my investing thought. How you've been spending your time? Like you're way more in the middle of some of the sphere of crypto and Bitcoin, and that's been a hard pullback. I'm an investor, or I bought or traded, I guess I should say. I started in 2020, but really started evaluating in 2017. Me and a couple of hedge fund friends got into it and really spent some time right before that last rally and collapse. And this feels very similar. I'm just more invested, I guess, from a dollar standpoint, but definitely more invested from a time and understanding. And it's an odd thing to think about something that's up tenfold from when I first have something in a OneNote folder about it and seeing the world say, we're in the middle of a collapse. It's like, well, it's perspective. But I'm curious how you're reacting or what people are saying in your in the circles of just pure Bitcoin at this point, because it's the highest dollar value market out there. What would you?
I'm happy to talk about it from the Bitcoin perspective, and then I'm not as into crypto primarily because things like what happened this week with the Luna, whatever that is, stable coin, and just this whole fiasco with however many tens of billions of dollars liquidated. I just have stayed away from the crypto space. I think a lot of the crypto space is just fine. It's just it's the wild west of creative financing that we've seen it, people don't realize in 2008, money markets were losing the peg, and they were going to go negative. I think had the Fed not stepped in or had the government not stepped in and bailed out these banks. And I think that people in the crypto space are doing a lot of the same things that were happening in traditional finance when we've seen these just horrific crashes. And so that's why I've always been hesitant around these products that I believe are securities, quite frankly. and or, financial products that have been packaged on a blockchain and claim to be kind of these decentralized things, when the reality is we can see that they're not, because people can make changes to them. So, I mean, like, I won't go too much into the crypto broadly, but Bitcoin specifically, I mean, I think the thing that helps me is that I'm friends with a lot of guys that have been in the space for a long time. And everybody that's in the space that's been there for a long time will tell you some keys to advice. And one of those is don't put money in you can't stand it to be really volatile. Don't put money in that you don't try to trade it. Don't try to get in at one point and sell. They're like, if you want to do this, look at it as like a reserve kind of savings vehicle, and look at, 4 or 5, 5, 10-year time horizons. And with that type of hold mentality, and then, you're going to see these ups and downs. And you talk to guys that have seen it crash, 80%, and they've had a bunch of their net worth in it. And they just kind of laugh at these moments because they're like, this is what happens. And then, like, as it relates to mining, I think that it's really interesting because the hardware prices for these computers, like mining economics really kind of have this sort of stasis to them. And it just depends on when you enter, right? So it's like we bought equipment for one of our deployments, and, prices have come down on that kit since we deployed. Luckily, like, we got good pricing and we didn't deploy that long ago, but like, you can get the computers cheaper now. So, our payback horizon or time horizon on that investment's been stretched out a little bit at the current price deck. But the reality is, for us on the Bitcoin side, is that we're mining, or at least I am personally, the partners, when we make distributions, people can do whatever they want. But me personally, and I think the company mentality is to not sell the Bitcoin, because we don't need to, because we've got a really cheap energy source. We bought resources in the ground that we own. And so we have some of them that we're selling to the market, and prices are really strong right now. So that's got, USD cash flow coming in, and that can pay the operating costs, which are also low because we've integrated and own the power generation and equipment. And so you're really just kind of, basically dollar cost averaging Bitcoin. And if you hold it, and you've got a long-term horizon, which I do, then you're not worried too much about these fluctuations. Although it does get you a little bit excited because hash rate is still going up, which means the computers are getting cheaper. And so if you are looking to get into the space, like, now is a lot better time than it was, in the fall when Bitcoin was 65,000 or whatever, because then the equipment was way more expensive. So if you view it under that, lens, and I think I tweeted the other day, it's like, if you have cheap energy and you want to, and you can harvest that and, mine Bitcoin, it's a great way to dollar cost average, and you can be okay. I think for me, broadly, in terms of the price action, I just am like, I've made buys like above the current price. I think when I first got in, it was kind of in the 30s. And that's when I've made like a lot of my investments. But the money that I've put in, it's like I've put it into hard wallets, and I've done multi-sigs. And so they're basically, it's more liquid than like a 401k. I mean, I can move it whenever I want, but I'm viewing it as like that type of a vehicle. And I can tell you that, like, I rarely look at my 401k. Like, I mean, I don't look at my retirements all that often, my retirement accounts. So I kind of view it as money that I don't need in the short term. It is very, very long-term horizon money. And I don't even look at what the holdings are worth, because I'd have to plug in a hardware wallet and pull it up. And I don't even do that because they're hidden in safe places in a multi-sig. So, when times like the other night, I couldn't sleep because my kids were up, and I saw it crashing down to 25,000. And I was like, and I had a little bit of money on exchange and like a little bit of cash. And I was like, I'm going to buy a little, and I bought it, and then quickly moved it off exchange because I don't like it being on exchange. But so the purchases that I'm making in it are just more like, hey, look, I'm going to carve off a little bit of the US dollar savings that I have and put them into an asset that I believe is scarce and that over time will hold value. So that's what I would encourage people to do, and like, it's just, if you're going to get into it, it's like anything. It's like buying individual stocks. I mean, I'm not a trader. I don't track this stuff day to day. If I ever buy stocks, it's with the, intent to hold them for a long time. And I put them in things that I think will retain their value. So that's always my view on it. I know a lot of people are kind of traders. They want to get into positions. They want to, make a quick buck or trade out. And that's just never been my philosophy. Even on like the natural gas marketing stuff, we've never been a group that is out taking a bunch of speculative bets on price action and trying to arbitrage. You can make a ton of money doing that. You can also lose everything doing that too. And so we've always just viewed it as a brokerage, move product, get the best price, charge a fixed fee, because we're just really not in the business of being day traders. I mean, that's just not what we do. There's groups that do that really well, and they're market makers, and we need them. And that's great. and they track weather patterns and do all that stuff. That's just never been that's never been my kind of risk tolerance. But so
No, it's
anyways,
just, yeah, I hate to see people lose money. It's more, I've always told people if you want to try to understand something, you actually should have some monetary exposure to it.
right.
And that just forces you to pay more attention. And no matter what it is.
Let me ask.
So
Let me ask you this: like, what's this? So there's this phenomenon on Twitter, and it's really kind of bad taste and bad form to me. And I try not to do it. There's been a few times when I've dunked on people for like ESG stuff, or like they did some ESG thing and it like is tanking, and I'm kind of like, this is why you don't. Then I catch myself and I'm like, you shouldn't dunk on people if something bad pans out for them. But Twitter seems to be like this place where everybody takes like pleasure in whatever other person's misfortune, and they're always like gloating about it. And I just am like, that's just a bad, I mean, who's like, because everybody's going to have time in their life when like something that they've invested in or they've done is not panned out the way they wanted to. And so it's like, golly, it just seems like bad karma. People are just constantly like, saying really crazy, just really like mean stuff, like kind of relishing in other people's misery, and they do it publicly. And I'm like, that's just an odd thing to cheer on. I don't get that phenomenon of like kind of publicly ridiculing or dunking on people whenever their stuff is bad or
well,
whenever
don't you
like their
think there's a
investments are bad.
degree of, we're social animals, and so you get this opportunity to join the mob, and
Right.
mobs become mobs, and so independent thought is something that is unusual and rare, and so I tend to I've cultivated my followers and followings. I'm peaking out at 1111. I've decided, so I am, as I add smarter people, I'm dropping people that I haven't liked or haven't gotten anything out of them recently.
Right.
But yeah, those negative vibes. Yeah, it's just odd. And the other thing that I do think happens a lot on Twitter, and I've caught myself doing it, is sarcasm. And so like it's hard to read sarcasm and know when someone's trying to be funny. It's hard to be funny. First things first, and then second thing, not everybody shares your sense of humor. And so I do think there are some, sometimes where you can mistake a comment and it's meant to be humorous. I know it's happened
Right.
to me in the past around things like nightmare fuel, where
Yeah.
I just don't, I didn't read it the right way, and the person was trying to be funny and accept an apology. That's the thing that Twitter doesn't have, is an apologize function. But I do think it'd be helpful, because I think a sincere apology is something society lacks, and those things are meaningful. One thing that was interesting is this convergence of our conversation and kind of where Twitter is. Went and hosted and judged. The Texas Oil and Gas Association had an energy technology showcase, and 2 out of the 8 presenters were effectively taking stranded energy and installing Bitcoin mining on them. That was pretty interesting. But the winner, the other side that you hit, was really a lot of them were ESG focused. Whether or not that's figuring out a way to install gas compression to degas pipelines whenever you're doing work on them. A little company that's doing that with kind of an innovative compressor station and effectively a CNG station. Like if you can end up fueling vehicles, 3,200 PSI tanks to then take that to CNG. The one that won was an IR camera for gas leak detection at much lower levels. And so effectively you put a camera on site, it can cover 150 meters in 360. And I was on the panel with the head of Halliburton Labs, and we both looked at it and said, this is a simple solution as opposed to having point source monitoring, where the industry is just getting cleaner day in and day out, and using technology to do that. It just makes me feel good. And I know that you were on their first one in November. I think Texas Oil and Gas Association is trying to do a lot of things, actually, a couple times a year, around incentivizing and really publicizing how the energy sector is cleaner, is more environmentally friendly, has better governance, because they're returning cash to you. A
Yeah.
dividend and a variable dividend ensures governance, because what I've always said is once a CEO, COO, and CFO are paying their college tuition bills with the dividend, they're unlikely to for their kids, they're unlikely to cut that dividend. Or they're paying mortgages, or that cash flow becomes important to them.
Yep.
And that just ensures governance. And so the social side, still what I think is interesting is, more diversity and more people are in the room now. And I think that's one of the other benefits that I hope we continue to see in the energy space. So I try not to bash on people. I can definitely be sarcastic at times, but it is an odd space whenever I see the mob come after. And it's usually outside of EFT and outside of the finance side. It's like I see things in F1 and places like that where like, man, why so harsh? This person's just posting opinion.
Well, I've trolled people too. I trolled a guy yesterday and he blocked me and I didn't feel bad. Someone was like, he doesn't want to have, the conversation. And I was like, no, I just trolled him and he blocked me, which he's free to do. I mean, he said something really dramatic. He's like, my worst fears have been realized about some coal plant that they were going to keep online because it was going to mine Bitcoin. And, I'm just thinking, hey, look, we're in the middle of an energy crisis. Like, we need all the power we can get right now. And I trolled the guy, just said like, something like cry harder or something, but this guy was being over the top dramatic and just as one of these kind of eco warriors, which is fine. But, and I think like there is some level of like, if people are saying, like, people have called me out on stuff that's wrong. And I'm like, yeah, I was wrong. Like, I posted something that wasn't correct. But to me, it's more the like dunking on people when they have really bad misfortune in their life. That's the part where you're like, that's just sort of, it's one thing to be like, hey, this is a dumb take, and like kind of troll someone about it, which is sort of what Twitter is for.
Well, see, I don't understand why people post about bad misfortune. Like, why do you want the world to know that, and I've thought about this a lot, like I just lost a shit ton of money in whatever, or,
right.
My dog passed away. Like, your friends should know that, not the 2,400 people or 5,000 people or 100,000 people that follow you. Like, do you need that reinforcement, or do you want your 10 people closest to you to give you a hug?
I think it's just more like people that they know. Like, for example, if you're a big oil and gas investor advocate and you've got like a stock that you've, said, hey, I really like this stock. And then that stock has like, a bad performance on it. They miss an earnings call or something. They have a miss and then the stock drops. And all these people just jump in. They're like, making fun of that person and basically praising that they lost money. And I'm like, yeah, but that's kind of, I don't know, like everybody's going to go through times in their life when they try to have something that they endure and then they have a challenge. So I think like, pushing back on ideas and having fun with that is a little more palatable than like relishing in people's misfortune and like celebrating it. To me, that just kind of crosses over to where I'm like, this feels icky. But it just is what it is. It's Twitter, and that's going to be part of it. If you're putting yourself out there, then you gotta roll with that. But no, it's weird. Like the times right now, it seems to be like in a really exciting time to be following just everything involved with the markets. I mean, the macro is super interesting. You mentioned the hyperinflation thing. I started reading. I didn't finish it, but When Money Dies is one about Weimar Germany. And it's really interesting. I'm about a third of the way through it. And it was wild. I mean, it wasn't like this type of inflation, but even this type of inflation is scary. And then you couple the inflation with with all the markets and the choppiness and things going down. And another point I wanted to make earlier is like around the tech space. And man, like if you look at like Amazon and some of these blue chip tech stocks, I mean, they're below their pre-pandemic prices, right? Like Amazon's back below where it was in 2020 before the pandemic. So, and then like Netflix and Peloton and I guess Zoom, and I'm trying to think the other ones that were really bad, like Shopify maybe, and others. And like you said, own real things. And some of those just didn't have a lot propping it up. The big one to me is Tesla, how it's continued to hold up. Any thoughts on that? I know you guys were covering it. Now you're not. So I don't know if you can speak any more freely or if your opinions have changed at all. But that's one to me when you talk about real things and competition. I mean, I think Netflix is a great proxy to look at, to compare like a Tesla to. And the reason why I say that is not because streaming services and making cars are the same, but they're both like heavy CapEx intensive. Like, to make new content, it costs tons of money. And then the barriers to entry are really low. And you've got entrenched players that have been doing it for 100+ years that are good at what they do. And you've seen it with like Netflix, and you've got Disney and all these other streaming services. And it just kind of was like, oh, Netflix is the new whatever blockbuster or something, and they're just going to have this dominance. And then you see what's happening with all this competition. And I just think in like the electric car space, I mean, some of these new I'm not a big electric vehicle guy, but some of these new EVs that are coming out from traditional car makers are pretty slick. And it just seems like Tesla's really going to be, I mean, I don't know, man. That's one to me that like I just keep waiting for it to kind of implode down to some much lower valuation. But just your thoughts on that one specifically.
It's an interesting question. So let me walk through a couple thoughts. So first principle of like, okay, how you got to drive a car. So internal combustion engine, takes heat, converts it into work, and has waste heat. And so, your typical ICE is 20 to 30% efficient. If you make the most efficient ones, they're 50% efficient because they have so much waste heat generation. And so, like, the reason we use ICE vehicles is they have a very compact fuel source. And so essentially you can go long distances and not worry about that waste heat. Really you kind of flow through into gas turbines. The most efficient gas turbines can be 65, 72% efficient. And then electric batteries are kind of that 85% efficiency as far as, power in and work out without the heat losses, unless you start getting into some of the new design batteries. And there's some companies on the West Coast that are, probably coming public, and they have some interesting ideas as far as a new motor design, so you have even less waste. And so the issue is like the logic of moving from an ICE engine that powers wheels to move you forward to a electric motor that powers wheels to move you forward is a doubling or tripling in just energy efficiency. Doubling if you're and then if you're solar or wind powered, essentially that loss in the system is much, much lower than like what a gas turbine would be, even combined cycle gas turbine. And so like kind of do that mix, the logic of the holistic system makes sense to me, from energy efficiency to converting into the outcome. And that's just a question of price. And so I know that you don't believe in EVs, but just from a mechanical engineering standpoint, they're going to be more efficient to move you forward than an ICE ever will be, from energy in, energy out.
I would say, like, just to caveat that, it's not that I don't believe in EVs. I think EVs have a niche use case. I think that in a perfect world, there are applications where EVs can work really well. I think more of my question was around, but I don't think that, well, I don't want to get into the whole like EV versus ICE.
But then valuation. So then the question is valuation.
More just about
so like now you're going to have
right
$40,000 F-150 Lightnings coming out. And what I think is going to be the difference between Tesla and every pure play electric vehicle manufacturer is that they went from, product to production to scale. And you're seeing the flaws in the emerging companies of moving from product to scale. Ford's going to be the first company to really see, how scaling actually works, because their manufacturing capacity, it's a totally different process for assembling an EV truck versus an ICE truck. But they've done it many times and unveiling new products. And so that's, I think, going to be the test case. And if like you can see, because like you said, the Volvo vehicles, the Porsche, like their high-end competition on EV is just a better fit and finish. And I don't know, I've never owned a Tesla. I still have a Rivian on order for whenever that's going to be. But the Teslas just, they kind of squeak, they're plasticky. Like I'm not trying to, like the internal fit and finish isn't the same as a high-end luxury vehicle, like an Audi or a Volvo, even not even getting into the Mercedes and the equivalents. And so like, I think that's going to be where the rub's going to come, is you're going to have the equivalent performance with a better fit and finish on the inside and a better feel. So they're going to see competition from both sides. And then they're going to have to start advertising, because it's been a word of mouth kind of cultural icon as the leader, with no advertising costs in our model. And like every other auto manufacturer has significant advertising costs.
Right.
And so and then you need to get to the next phase, which is incremental research and development. And so our analyst at Pickering, who's now back on the buy side, always would highlight that, Tesla's percent of spending on R&D was lower than, the Apples of the world. And, to continue to be the leader and the innovator, you need to have high R&D spending. And, the cost of what happened and why you have more EV companies coming out is a lot of engineers and scientists at Tesla made a bunch of money in Tesla stock and then, could go become entrepreneurs. And so you lost some of that first and second wave of innovators that are now out, doing things independently, whether or not that's around the battery side, the recycling side, the motor side, or the actual making vehicles. And so it's going to be telling. Like I applaud everybody that's owned Tesla. I think that it's a phenomenal company. It's just, the valuations versus the incumbents still don't make sense, which that's been the final thing that I've been interested in is like when you have a highly valued equity, you typically should use that to make acquisitions. And so like think about what Microsoft, did for years. They make acquisitions every quarter that you don't hear about, that then roll into some system, or Amazon's done the same, Google's done the same. There's some internal and external side. And maybe we've missed it. Maybe we're going to see something come out around Tesla from the using their equity to buy things that could give them a leg up as well, or a leg up for more manufacturing capacity. Right. Their supply chain stuff was phenomenal in the first quarter, but it's kind of a last in, first out. So you're going to see higher costs flowing through the remainder of this year, I would expect, just because of the components to make things are going up.
It's so, like, do you think Elon would have been better off buying Ford than buying Twitter? It's about the same.
I thought that tweet about Coca-Cola was actually more prescient than buying another auto. Like Ford wasn't a good company and had to be almost bailed out. Like the auto manufacturing cycle is not necessarily the highest cash flowing and best businesses, but buying Coke, the whole Coca-Cola brand, I was like, okay, now he's thinking like a cash buyer with a highly valued equity. And I would actually have thought that made more sense. And I know that a lot of people interpreted that as a joke, but yeah, I think there's always about a slew of and a skew of logic in and amongst how brilliant people, comment to the whole public. And there's always a little bit of there. The other way to phrase it is the best sarcasm has a little bit of truth in it. Mm-hmm. And so just always look for the little bit of truth in those types of statements, is reading between the lines.
Yeah, we're all closed that one. I wasn't planning on getting into a Tesla. Yeah. But what I was thinking of, the reason why I got there is because I'm looking at all these other stocks that have dropped way off now that kind of fundamentals have come more into the spotlight and growth has slowed. And that's one that always sticks out to me. I think people's decisions around cars there's just such a brand loyalty there. Cars are like really personal. You know what I mean? Like people love their whatever. They love their Subaru. They love their Toyota. And they're passionate about that brand and then kind of like what that brand represents. It represents you when you drive a vehicle, or a lot of people, that's how they view it. And so I think that for the Tesla loyalists, that represents them. But I think that for people that want EV or hybrids, when their favorite automaker starts to offer that, I think that people are gonna, it's like people are obsessed with Forerunners. Like people love Jeeps. Like, right? I got a buddy a guy that works for me that loves this Jeep. Just bought a brand new Rubicon, the hybrid, and it's pretty sweet. And I mean, I don't know, some of the hybrid aspect to it seems a little gimmicky. It doesn't get a ton of extra there, but he was like, hey, I like the idea of having this battery. I like the idea of that electric aspect to it, but I'm a Jeep guy, right? Like he's not going to go, if Tesla made a Jeep knockoff, I don't think he would buy one. I think he would stick with Jeep because that's what he loves. And he's had one since he was a kid and he always wants one. So that's why I think like this idea that Teslas are just going to be the only car on the road, or this valuation that's baked in that they're going to have this dominance, to me doesn't gel with how I think people view their vehicles. But one thing you'd mentioned in a text, I know we're hitting 30 minutes. I don't want to go too long today. It's Friday, but you had this fun kind of thought experiment. I don't know where it came from, but I like to be able to take these conversations wherever we want to because we can do whatever we want because it's our show. But I like you said, hey, if you had the chance to either go 100 years into the past or 100 years into the future, and that decision was permanent and you had to choose one, which would you do? And I wanted to hear your take on that.
Yeah, it came from a conversation I think with Sam Harris and Ricky Gervais I was listening to, and so I've been mulling this over actually about 7 days now. So yeah, a time machine shows up. You have to get in it. Whenever you hit the button backwards or forwards, everybody you just disappeared. So
Right.
all the people would find is a half full cup of tea and this StreamYard rolling, and I'm now either 100 years back or 100 years forward. So the conclusion that I've come to is 100 years forward is a bet on humanity, and 100 years back is a bet on self. And the reason I say that is 100 years forward, I wouldn't know how to turn on and off the lights. I'm adaptive, but like you think about like what I would have to do and where things would be, I'd hopefully, we hopefully have improved societally enough, and people are in a better position. Technology's developed, and there's some basic infrastructure. Whether or not that's for everybody. And a lot of solutions have improved because I do think we're on a positive trend in everything other than political discourse, which is just dominated by fringes. But as a whole, I think the world's getting better. So that's my belief. No worries. But that's a bet on the future and all of humanity, and then hoping that me as a person can adapt to whatever has happened in 21, 22. Now you go back to 1922. What I realized was I think only white men would comfortably go back in time. Like you just really start thinking, and I know this was a perspective that was a little bit skewed, but like social rights were totally different. The world was in a different spot. And I think it would be a lot harder to transplant yourself in with nothing, essentially, as a Asian man or as a African American woman. It's just like 1922 in Houston, because you're going to be exactly where you are. I'm going to drop into effectively a field with just the beginning of Rice University, one building up to the northeast of me, and it's going to be almost summertime and hotter than get out. And so the question is like, what could you do then? But like, if you can make a bet on self, like I had this perspective of like, imagine taking effective altruism to 1922 with the view of knowing where things could go. And so if you could accumulate any wealth, you could then be in a position to like accelerate sulfa and penicillin antibiotics to essentially the very end of World War II or World War I, and like improve healthcare dramatically for people. You could effectively go, outcompete the Rockefellers for the existing oil and gas infrastructure. Move out to the Permian. Got to survive the Comanches. There's a great book that Joe Rogan recommends around that, and I actually read the book you were talking about, the Weimar Republic, and that was some of the root of like, it's horrible what happened at 1922. Like I wouldn't want to be in Germany whenever I thought about this 100 years back, because next thing the police ride into town on their horses, and the mob, effectively knocks the police out and, slaughters the horses for food. And that was in a very developed country just 100 years ago. It's a wild perspective of how rapidly things change. But if you could get in a position, you could actually make some real, progressive improvements to niches of society very quickly. And that actually is a pretty compelling idea of accelerating the advancement of humanity in your own little way 100 years ago became something really interesting. So yeah, that's and I don't know how much we haven't talked much about effective altruism, but essentially it's a perspective of give away what you have to the most effective places to improve humanity. And if you're a hedge fund manager, I've always said like, you're better off making that money and then giving it away to some charity as opposed to going and being, a Peace Corps member, because your impact's going to be multiples of that. And so taking that perspective to 1922 would be a really interesting opportunity.
Yeah.
So what would you do?
It's a good answer. I like the idea of how you've kind of broken it up and saying if you went into the past, there's an altruistic angle to that you could have. And I also think that there's a self-interested angle as well. I mean, obviously going in the past, you could create a lot of wealth because you have a lot more knowledge about things. I mean, certainly the social aspect to it, depending on where you are. I mean, the world was not a friendly place to people that were different back 100 years ago. So if you were somewhere where you were different, then you probably had a struggle. Today, it's still that way as well. I mean, we're in the most inclusive period ever, but depending on where you're at in the world, it's just relevant, right? I mean, if you're somebody that doesn't look like everybody else and you're here, it's harder. But if I was somewhere where I didn't look like everybody else, it would be harder for me there in theory. So there's that. I think that the altruism piece is interesting around what is the best form of being altruistic. I tend to lean towards, capitalism and towards, businesses and things like that. Because I think if you can create, like, there's this invisible transaction that's happening with, there's a real transaction where money is being, exchanged for goods or services, but there's also this invisible transaction. It's like a great example is like J.K. Rowling, and she's this multi-billionaire, and people paid her money for these books that she wrote. But in theory, people got more value in return for those books than what they paid her, because you wouldn't pay somebody something unless you thought the value was worth more than the dollars that you were giving. And so although these billionaires, the people want to demonize them, the reality is if, that they've created in excess of multiple of that type of wealth for the people that they've made their billions on, because people wouldn't have paid for those goods or services had that not increased their quality of living, whatever that may be, whether that's reading a story to your kids or whether that's plugging in having an iPhone. I mean, the reason why, Steve Jobs and Apple's wealth is created is because they actually created more wealth for the people that they sold those services to. So I think that, people get caught up in this, like, people that create businesses or corporations or all these things that are greedy and evil. I actually view it as the opposite. I kind of think that they're actually creating more good than what they're worth. Now you can argue monopolies and, people corner markets and there's price gouging and all these things. I'm not saying none of that ever happens, but I think on the whole and on the average that the people that create wealth are in fact giving back more than they're taking, because that's the way that they created the wealth, was that transfer of value. So in terms of
thought about that, other
yeah,
than like, I'm having a hard time with some of social media, like some of the externalities of wealth creation or that we're not paying for. Like I still believe that the energy sector created a lot of value and improved people, but we never paid for the externality of pollution. And that is a transfer to the people that are driving cars or consuming that energy or using the plastic cup that we have. I'd rather have a plastic syringe than a glass one that has to be heated up to clean before I get my next injection. And so like I agree completely, but the externalities of things like Facebook now, and like some of like you talked about earlier, this circling this back into the conversation of the bashing that is happening whenever you don't actually have a conversation because of either being anonymous or being part of the mob. I'm wondering whether or not some of those things have to be paid for. And so capitalism, I think, is an allocation mechanism that is kind of like democracy. It's the best solution. When compared to all others, it's the best of those solutions. But I wonder if there is something that is potentially, how do we pay for externalities?
Social media is a great one to point to say that there could be more costs. I think there's externalities there, certainly above and beyond potentially the benefits. That is one that is, like they say, if the product's free, then you are the product. Mm-hmm. And what are you giving in return? And you're giving your time and your attention, and you're giving a lot up to these, to media. And we're on media right now. People have an insatiable appetite for content. And so that is probably a really curious, case study around that philosophy. I think energy to me is a little more black and white, and I've argued this is an interesting philosophical kind of question, and get your take on it here, and we can end it here pretty soon. But yeah, this idea around the price of carbon, and we've done a number of episodes on it. You've got this position that carbon is going to keep going up in price, and and it probably will. But but this idea that like, CO2 is negative externalities, and you've made the point, well, correlation isn't causation, and just because the correlation of CO2 going up and use of fossil fuels, it's also directly correlating to quality of life. But I would say that the externalities there is, I mean, look at like all these different metrics, right? Like most of us wouldn't even be alive if it wasn't for, a good chunk of the world wouldn't be alive if it wasn't for hydrocarbons. So I think that to this point, I think the price of carbon has been a positive. I think that the more we use, the better off people have been. And yes, there's pollution. Yes, there's consequences and trade-offs. But I think that the reason why people use these things is because it is making our lives better. We wouldn't do it. And I think that the idea that CO2 in the price of carbon should be negative is more based on kind of this faith-based system that into the future it's going to, wreck the economy, wreck the world via climate change. And people get mad at me when I say it's faith-based, but it is. It's faith in this research. It's faith in the scientists. It's faith in the studies. It's faith in the models and the projections. But the historical data is pretty clear, is that when CO2 rises and we use these products, it's a net positive, I believe. And I think the evidence shows that to be true. So you're really taking a leap of faith into the future saying, yeah, I know it's, 7 billion of us wouldn't be alive if it weren't for these things. But moving forward, this is going to be a really bad thing for us. So it gets, you kind of get into this level of belief system, right? And so that's why it's just an interesting thought experiment. I'm not saying we shouldn't try to reduce CO2. I'm just saying that you kind of have to have some faith in these projections and these models and all these things versus looking at the historical data. But I don't know. A lot of people would probably argue with me. It's just one that I've struggled with about it.
Yeah, the things that I'm spending my time on right now are actually, trying to think through ways and to solve two things simultaneously. And one that's most interesting is if you've ever been in great farmland and touched the soil, it's black and gritty. And, the reason it's black and gritty is it has a lot of carbon and nitrogen in it, and it's rich soil. And so like imagine a path where you can convince plants to store more carbon in the soil. And so you effectively feed more people and you capture carbon, and you do it in existing pathways that already exist. And so, figuring out how to do that globally is really interesting, because now you're feeding the 10 billion people that are going to be here in the next 30 years, and you're replenishing soils, and you're essentially removing CO2 from the atmosphere in gigaton scale. Sounds remarkable, and it's available, and it's probably something that is going to happen. And it's going to happen in a lot of different places, and it'll replenish grasslands in sub-Saharan Africa. It'll help wetlands through some of the designs. There's a whole lot of interesting stuff that's going to happen. And while you're doing that, you can keep using the existing ag vertical and a lot of the existing hydrocarbon vertical, can keep moving forward. So you don't have to change all of society all at once. The faith problem that I have in everything that is faithful is a belief in society doing something that isn't necessarily the best for the individual, and individuals are selfish. And so like, whether or not you're religious or not, one of the benefits of faith is it leads to more of a societal benefit at the cost potentially of the individual. And you can take whatever religion that is, and that's probably the biggest benefit they had, was removing some selfishness. And that's the issue I have with a lot of the climate side, is people haven't figured out ways to do these things that are aligned with existing verticals. The other thing that I think is interesting is there's no reason to not use CO2 carbon capture, utilization, and storage. Like if you go to the Netherlands, they do vertical farming, and if you have an ability to capture CO2 and pump it into a building and grow plants more efficiently, so you're utilizing that CO2. Plants like a higher CO2 environment, so you capture that natural gas power plant that you're having to put into Germany because you're importing LNG, and you don't want to, or the coal plant because you have coal resources. Hopefully you're using a little bit of biomass in with that as well. But capture all the CO2 and put that into a vertical farm. Now you've made plants grow faster. And so like the utilization side doesn't get enough respect. And so that's the thing that gets me excited, is like you can keep existing verticals, you can do the right things, but then you can figure out sources. And sometimes it'll be you're going to have to put that CO2 into the ground and put it into, salt domes or aquifers, or you put it into enhanced oil floods. But that cycling of CO2 out of the atmosphere does improve operating efficiency, or might be used in the future, or maybe it isn't. But like that's the thing that I think is interesting, and for some reason a lot of people don't think about the U part of carbon capture and storage enough. And so those are the two things that I'm spending my time on. I think that you can do those things without necessarily having to just purely get the benefit of tax credits as well. But I do think aligning incentives around government policy will be important. That's my thought. And so
Yeah, those are good.
We can
Those
talk
are
more
both good.
about it.
I like efficiencies. You've talked about that a lot, and utilizing things. I like looking at quick wins is a big thing for me. I think energy transitions take tons of time, and they really have to be something that improves people's lives. And we've talked about this before, but that's my take on it. I think we can do a lot today with existing technology. I love all the stuff around looking at LNG and what it can do for the world. I really think that nuclear is critical and important. But the reality is only 20% of the world's energy use is electricity. And there are going to be some real physics related issues and problems around, like the fertilizer problem with having to replace that. I mean, there's a lot of industrial processes. I'm not saying we can't decarbonize all those. I'm just saying that people get so wrapped up in electricity when that's not, it's 1/5 of the equation.
I'm going to plug a book, Speed and Scale. It actually goes through each of these and talks through, the one thing that is interesting is in the ag world, people don't realize that a lot of greenhouse gases are actually nitrogen based as well. So every time you put fertilizer in, nitrous is something that emerges and is actually worse than carbon or methane at times. And so there's a whole part of what do we eat and how do we eat it that is interesting, and we could go down that path. But Speed and Scale is worth it's dense and has a 100-page PDF attached to it. But it's real implementable ideas around what actually makes economic sense as well, and that's where a lot of these thoughts that I have come from, and it's an assembly of a lot of thinking. But that's probably one of the better places if people are looking for a place to start.
Absolutely. Well, last thing here before we go, to answer the question earlier, I would probably go into the future. I'd probably go into the future, and the reason why is because I know what happened in the past. I don't know what's going to happen in the future, and I think that there is a level of exploration and curiosity that I think a lot of people have whenever you reach the end of your life, if you live long and you have time to contemplate these things, where you wonder what it's going to be like, what's going to happen, and how are things going to pan out. And I think that it would be really interesting to see that. And I do have hope and belief that we will continue to thrive and do good things as a species, I hope. So I think it would be really curious for me to go into the future and just to see all the tech and everything that's happened. Like you said, I might not even be able to comprehend it when I get there, but I just think the level of curiosity and excitement and kind of like it just sort of like, I want to explore the unknown aspect of it. That would be really cool. So I think if I had to choose, plus like the past it is harsh, man. I mean, you get appendicitis and you're done. So it's, which I've already had mine taken out, so I don't have to worry about that one, but there's a lot of other things that you could, get an infection or whatever. So the past was harsh. We've made a lot of progress. We're going to continue to make more, I think. And I think my curiosity would just pull me into the future to see what it's going to be about. But this was fun. I'm glad we did it. We'll talk maybe next week or the week after, but have a great weekend.
Yeah, good luck on the golf course.
Yeah, I'll see you.
Bye, y'all.